your business has big goals, you need more than just another vendor. You need a true partner who cares about your deal as much as you do. At PropLogix, we provide time-saving due diligence services from title searches to HOA research, lien searches, and more. Our team will go out of their way to ensure you're supported, and our reports are backed by our 6 Sigma quality assurance approach. PropLogix, getting you to the closing table with confidence. A new episode of Title Talks starts now. Unregulated alternatives to title insurance have been a hot-button topic in the industry, but are you familiar with a pilot program being tested by Fannie Mae that would allow for a waiver for title insurance in special circumstances? Today's conversation is from a live webinar PropLogix hosted with the American Land Title Association. Our guest was Chris Morton, ALTA's Senior Vice President of Public Affairs and Chief Advocacy Officer. It's important to note that this was recorded on June 20th of 2023. Any updates on the program from ALTA will be available on their website. We have a direct link in our show notes that you can find at proplogix.com/resources. Here's today's episode.
Thank you so much for joining today. For those of you who don't know me, I'm Becky Tassel with PropLogix, and we feel very passionate about supporting ALTA ourselves as a vendor in the industry, and wanted to make sure that we're consistently helping educate everybody else, our clients and partners and other vendors, to make sure that they're informed on what's going on as well. So Chris, say hi to everybody. I don't know where you're calling in from today. You can tell them where you are and what the weather's like while we wait for some others to join us.
Sure thing. Thanks, Becky. And first, let me say thanks to PropLogix. Just a wonderful partnership over many, many years. So we really appreciate that and appreciate this opportunity. I'm in Washington, D.C. today. We finally got some rain after a bit of a drought, so that's kind of nice. And we've got one more week. Congress is in session before a couple-week break for the July 4th recess. So it's pretty busy this week, but this is a really important topic. So looking forward to digging in with all the folks on the call.
Definitely. And I'm calling in from Sarasota, Florida, and something over the last weekend, we've gotten some monsoons. It's summer, we expect rain, but it's been like sideways rain, windy and crazy. So, but today's good. Don't worry, my internet shouldn't go out. So let's go ahead and get started. I already introduced myself. I am the CMO here at PropLogix. I've been with the company since 2017 and learned so much about the title industry since joining. I've been working in marketing for over 15 years now, and we are so excited to have Chris on the call with us today. He is the SVP of Public Affairs and the Chief Advocacy Officer at the American Land Title Association. So Chris, thank you so much for joining us. And if you wouldn't mind, why don't you tell everyone a little bit more about exactly what that role means for you and what you're passionate about doing in this industry?
Yeah, thanks, Becky. So our team here at ALTA, comprises all of our state advocates, federal advocates, and our communications and sort of media relations effort under the True Public Affairs umbrella. I've been here, I guess now, a little over 3 years. Been around DC for a number of years in the trade association world, but particularly in the housing finance space, as well as the broader financial services world. So I will just say this, this industry is such a tremendous industry. The people and the passion that ALTA members and partners have to really serve consumers and serve the goal of securing property rights in the right way is something that's just been tremendous. So I've really enjoyed it, and the team's really busy. We've got a lot of both opportunities and challenges, including the one we're going to talk about today, but I would not trade it for anything. This has been just a really great period of my career, and I'm enjoying it tremendously. So thank you.
That's amazing. And I know they certainly enjoy the dedication and the work that you've been doing for them too over the past 3 years. So we as an industry appreciate you and the efforts that the entire team's putting in to make for a better future for all of us. So thank you so much. But let's dive in, because everyone's here today for one of the hottest topics in the industry, which is what is this Fannie Mae title insurance waiver pilot program? Why don't you give us a little bit of a background here?
Yeah, let me start by just sort of maybe stepping back a little in time before we get to the actual pilot that we're going to discuss, just to give some context on why we're talking about all these things, both the pilot, and I know we're going to talk about attorney opinion letters, which have been a big topic. So really, the context is all about where the housing market has been in recent years. Obviously, now we're in a bit of a downward sort of trajectory from the significant highs over the last couple of years. But the reality is affordability is still a real challenge in markets across the country. And I think all of us recognize and appreciate and contribute to and want to solve the affordability challenge from where we sit in a way that is responsible and in a way that really helps consumers with unlocking the dream of homeownership in particular. I know for ALTA members, that is something that drives them every day. I think the question is, how do you get there, and sort of where do you target your efforts from a public policy perspective, which is where we're focused here in Washington. And so as a result of that, the GSEs, Fannie Mae and Freddie Mac, have over the years done a number of things to try to address the affordability issue. Most recently, as part of a broader set of issues around affordability that the administration, the presidential administration, has been driving, the regulator FHFA has worked with the GSEs to create what they're calling equitable housing finance plans. And these are plans that look at sort of the scope of all things on the homeownership journey and try to determine where there may be opportunities for greater affordability, cost reduction, those kinds of things. Again, goals that we absolutely support and are working collaboratively on a number of fronts, and we'll talk about that on the back end. But as part of this equitable housing finance plan process, one of the items that's been identified within that is this notion of reducing costs perhaps in the closing process. And again, something that we should look at, we should have a conversation about. And so that's where all of the discussion and conversation around new initiatives or new alternatives or other kinds of approaches has stemmed from. So those plans were put into place June of 2022. They're 3-year plans. They were just updated most recently in a couple months ago. And and so we've been engaged in this conversation around that particular aspect of title and closing that's been part of the plan. So that takes us sort of full throttle into sort of today and where we are. I think the concerns we have in the process have been several. One is really about making sure it's transparent and there is full visibility into sort of goals and objectives, and there's partnership around how to achieve those goals and objectives. I think we're still working to try to get to that place from an industry perspective with the GSEs, with the FHFA. We had a lot of good conversations, but I think one of our concerns is sort of opening that light and that sunlight. And so there should be a process to do that. I'll talk a little bit about that in a better way. I think the second thing, though, is the specifics matter. The details matter on these initiatives. And so there was a report back, I guess, in March that as part of this effort, Fannie Mae has been exploring a waiver of title insurance on certain loans that it purchases as a secondary market purchaser. Their mission is principally to provide liquidity in the marketplace for more mortgage lending to provide for that opportunity for homeownership. I think our concern is that when you start talking about waiver of protections, then you really sort of raise a lot of questions, particularly as it relates to an industry that is highly regulated, proven in its ability to protect consumers, pay claims, do those kinds of things, and secure property rights. experience. And so why you would necessarily sort of open the door to sort of waiving those protections, waiving those things is a big question for us. But this pilot has not been sort of made fully public, which is also part of the challenge. But as we understand it, in waiving title on the loan policies for certain loans that it purchases, Fannie would be essentially paying a fee to the lender for waiving that title, taking some of that fee perhaps as a claims reserve to cover some of the risk associated with that. And it raises a question as to whether or not they're now going to be acting de facto as a title insurer in sort of receiving that fee, taking the risk is what insurance is defined as, and in an area where they don't have the depth of expertise that we do, obviously, the set of history and experience or the regulatory structure. I think there is a question about whether or not this skirts, and we believe it does, into primary market activity, which is really beyond the charter of the GSEs. They're sort of statutorily created to be the secondary market player, not that primary market actor like we are. And they're not overseen in that way, right? The regulatory structure, unlike ours, we are state regulated, they are not. We are required to provide for reserves that are actuarially sound to pay claims and do those kinds of things. That's not part of what they were created for. And so there's a whole host of questions about expertise and proven ability here. So those are the things we're asking, in this process, and we've had some, productive conversations. But again, this has not gotten to the regulator, the program itself. We're hearing these things in the marketplace. We haven't seen the sort of full-scale proposal and what it all looks like. But what we've heard to date is let's just put it disconcerting, because it opens, again, opens a path and a door that has not, really been done before. And so that's where we're concerned. I'll say this too. There's been not just us saying this, there's been policymakers who've engaged on this topic. We've had a number of conversations with policymakers on Capitol Hill. Former regulators, former heads of the FHFA have testified to say that this is really not the realm of where the GSEs should be playing. They're not a disintermediary, they're not a primary market actor. And so, they've got enough to deal with sort of keeping the liquidity flowing in the mortgage space. And, let's be honest, going back several years to the challenges we all faced in the housing crisis, they didn't really sort of prove their mettle in many respects. And so in a time when you think about the situation in some of the banking challenges we've had recently, where banks have failed, or we're now, having some challenges in the housing space in terms of rates increasing and all of that. Why do we want to move in a way where we're getting government agencies in conservatorship because they were not able to prove sort of their core functions, doing something that, is beyond those core functions? So that's a lot, but that's sort of a broad overview of where we are and some of the, the big concerns that we have at this point.
No, I appreciate it. And just to tag on to what you said, I think that it's important to note that we are getting out in front of this because we want the industry to be educated on what's going on. But, we're going to accept questions today. There is still a lot of unknowns. We have not seen very specific criteria surrounding this. And so we're sharing what we do know to date. And we can use history to make some assumptions about the risks that could be here right now. But like you said, we leverage the strengths of the experts. I think we're preaching to the choir when we say we've got best practices in place for a reason, and we're regulated at the state level because of how complex, the transactional business can be. So let's go into how this differs from attorney opinion letters, because I think that was a hot topic at ALTA 1 last year. People were talking all about it, and I know those have existed for quite some time, but they've definitely surfaced. So why don't you explain the difference to everyone here today?
Yeah, so this is just, the reported pilot waiver of title program on the lender policy side that I just talked about is a component of, what now I think from all the GSEs, Fannie and Freddie, is a multi-pronged approach here. They're looking at all these different alternatives, and I think, again, our concern is that these are alternatives that, and particularly with attorney opinion letters, in the new iteration of attorney opinion letters, are not regulated, overseen, reserved for, all of those things in the same way that title is. And so, our policy when we step back from all of this is, let's have a conversation about affordability. Let's deal with, what we know and sort of the real numbers and facts, but let's do it in the construct of a well-regulated industry that can partner with with whomever to address some of those challenges, as opposed to start down the road of unproven, quote unquote, innovations that potentially, bring greater risk. And so on the attorney opinion letter side, there are sort of some new alternatives out there, again, differently or unregulated than title insurance. Some purport to have coverage for both lenders and owners and consumers, some only on the lender side. There is a product out there that is discussed as having an insurance component that wraps around the coverage. Again, I think part of the concern, and the NAIC Title Task Force has raised this, is those products haven't been very transparent. In fact, some of the providers of those products, when asked to provide the specifics on their policies, have actually refused to provide those to the regulatory requesters. And so, if these things are so strong and so comprehensive in terms of coverage, let's look at them and let's have that dialogue. And to date, there's been a bit of a stumbling block there. We are concerned because on the AOL side, historically title insurance emerged because attorney opinion letters did not provide the same robust protection and coverage. We provide for both known and unknown risks. So attorney opinion letters, generally speaking, cover things that are found in a public record search. Title insurance provides for those unknown risks that may emerge. So things like fraud or forgery, or in instances, the duty to defend from different particular challenges and defects. We have not seen that these emerging alternatives necessarily have the same robust coverage. And there's a real question about if title agencies are not at the closing table in terms of providing for the education, walking consumers through what it is their choices are, all of the things that they're dealing with in terms of the closing. Who is doing that? I think that's the case as well for this waiver program.
Definitely.
And so when we are not there, you're missing that expertise, you're missing that objectivity and understanding that's been proven and, again, regulated, sort of broadly speaking. So I know the NAIC and many state regulators are looking into these products. There's been 3 sessions that we have participated in with some of the attorney opinion letter providers where pointed questions have been asked. We welcome that sort of dialogue and discussion. I think it's important, but we have to get more depth of understanding about what these products really do and do not do. And to date, what we've seen is, they are deficient relative to the comprehensive and proven nature of title and what we've been able to prove over a number of years. So that's where AOLs are. Fannie Mae authorized these to be used in their selling guide in April of 2022. Freddie Mac had been doing it going back to 2008. There's not been a lot of uptick, however, in the marketplace. In the recent update that was done on these equitable housing plans that I talked about, there were only 45 loans with attorney opinion letters in Fannie's update out of 1.2 million loans that were purchased. I think, indicates obviously this is a new and emerging sort of area, but I think there's also questions perhaps lenders are asking about risk and whether or not they should be engaging in something that, again, that is less than a track record of, of sort of proven success that, they've had and sort of the trusted nature of the relationship they've got with a number of title underwriters and agents around.
Exactly. Yeah, the liabilities, at stake are scary and their reputation's on the line. So I just threw a link in the chat here for everybody that goes over. ALTA does an incredible job of consistently keeping this page updated with the latest and greatest letters that have been sent, articles that the industry should be tapping into. So if you guys have not been here, keep yourselves up to date outside of this conversation by visiting this page, and it does go a little bit more in depth about the difference between the pilot program and AOLs. But I know today we are here very specifically to talk about this pilot. So what kind of implications could this waiver program have on the various parties in the transaction? We were just talking about the lenders, and I know, the consumers, and of course the agents and underwriters, they all play a part.
So, well, let me start with what, again, there's things we know and things we don't know about this particular waiver. As we're learning and we're hearing, the sense is that this is going to be refinance focused to begin in terms of the pilot. And so, again, that to some extent raises a question, well, what are we really doing here around home ownership affordability? If it's refi focused, people have homes, obviously there's sustainability components, but are we really setting up a program that is going to be meeting the goals for which it is intended? And what are the risks we're taking on and doing it, and do those things match up? Does it make sense? So, I think in terms of some of the concerns, again, let's just assume this is a refi focused program. We're in a waiver situation. Homeowners are not benefiting from that curative that's taking place between, the purchase and the refi, to produce the lender policy on the refi side. The title companies will be cleaning up, documents of record. They'll be satisfying, paid off mortgages, cleaning up things like property descriptions in, the instance of, things like divorce, those kinds of things. This is not done, without the engagement of the industry, engagement of the title companies as partners in providing that policy, in working through, that approach. And so that's, one set of questions, one set of concerns that I think those things don't get revealed. Those risks are there. Who's going to, manage through those risks and help at the end of the day? I think the other thing here is really a claims handling question. So let's say Fannie Mae and the servicer identify title issues, in the process. This is most often in their circumstance, it's most often going to be in the instance of default. And so if that's the case, you're not having a title policy and the title company's ability to cure defects after a claim is made, are you incentivizing, for instance, foreclosure instead of modification? And how does that play out? So there's some questions here about that incentive structure and how that all works in this particular instance. I think, for instance, let's give an example of how that may work. So if you have a home equity line of credit as an example, and that's something that wasn't closed during the refi in this instance of a title waiver, and the borrower keeps borrowing on that home equity line, right? So as a servicer, what's your option? You either pay that off, right, or you foreclose in order to subrogate your rights there in the process. So if you're having a title company involved in this, then you're involved, in closing the policy. It's issued. You can fix the issue with a modification. You can be at the table there trying to work through some of these challenges. But if you're not, and there's just this waiver of title, and the question is, how do these things get addressed and resolved in an effective way? Again, from the perspective of an industry and experts, professionals who have a track record of dealing with these significant challenges over a number of years, in the process. I think the third thing that we're hearing too about this pilot that is concerning, really, again, back to the goals of what these equitable plans are attempting to achieve. So we had heard from a number of places that, all borrowers are going to be eligible for this waiver, but that, it may be focused in the refi space on people with significant equity, 80% loan to value. So these are, again, what probably borrowers who are better off in better circumstances. It's not necessarily targeted to those who are the audience for, an affordability need.
Affordable housing.
And so what does it mean for them? Then if those people are not part of this process, then are we skimming the top to create a new program and a revenue stream in a primary market for, for players who are not really kind of addressing the challenge that is purported to be put on the table here? I think it becomes then perhaps more costly for the lower moderate income borrower if you're skimming the top and you're dealing with title waivers and other things for those who, are, of that different classification. So, again, a lot of questions. We don't have all the answers, but I think this is where a transparent process is important. And one of the things I'll say in that is that there is and has been from the Federal Housing Finance Agency a rule that was put forward and finalized last year. It's now in effect that requires essentially all pilot programs, new programs and activities that come out of the GSEs to be reviewed by the FHFA. We would encourage the FHFA and have these open for public comment and input so that industries like ours, stakeholders, can be seeing exactly what the parameters of this are and providing the expertise and the assessment so that we don't find ourselves in a position down the road where all of a sudden, whoops, we didn't think about this factor or that factor, claims start coming in and we don't have title, insurance on those loans, and what happens then? And as we know, claims tend to come in not immediately, right? This is a 5, 7, 10-year process down the road when you start getting most of the claims coming in, and a pilot is what, 18 months, and there, even if you have no claims in that period, you check the box and say this works. Well,
I think that's what's so hard. Yeah, there's not enough time.
That's a real concern.
Definitely. And I mean, I can speak from, my perspective of just the visibility I've had into some of the curative issues that, you'd run into. It's really scary to think that people could have a second mortgage that was never closed out on a house, and the person who the mortgage was in their name has passed away. Maybe the chain of title has been transitioned and you can't even find some of those companies you need to sign off on. Like, that's where the experts really come in. And these people who are introducing the pilot programs, they should definitely be involving you in the conversation, especially since a year ago, they, passed that new program to say that they would have open lines of communication. So I think we did a great job talking about what the risks are. And I think now we need to, discuss whether or not the program is actually removing the cost of the policy itself, and what other closing costs it would or could affect.
Yeah, so let me start by just level setting on cost and expense, because I think this is a really important topic. And I think, to be fair, our industry can do an even better job in explaining sort of the trade-off between cost and value in terms of the protection and the service and all of the things that we provide. And I think, you know, that is an educational effort that we take seriously, that we need to do more and better job, all of us in the industry. But just as again, a reminder of what we're talking about in terms of sort of life of the loan fees and costs. This is for title insurance. It is a one-time fee at closing, right, for the premium, you know, and for the settlement. All in, it is, you know, 0.7% of 1% of the loan amount. And if you look at the cost, the entirety of the cost of sort of the mortgage transaction and home ownership broadly, you know, we're not, if you look at what is more expensive, you know, servicer costs, the costs the GSEs themselves charge, you know, homeowners insurance, you know, lender fees, taxes, all of those things are significantly more in the grand, you know, scheme of things. And so while I'm not downplaying the need for all of us to be a part and partner of the solution, the reality is let's not sort of miss the forest for the trees here, and let's really make sure we understand what we're talking about, because I think that gets lost in a lot of respects throughout this process. But in terms of what they're talking about on you know, cost reduction, et cetera, I think there's a conflation sometimes between premium, settlement charges, and sort of things that get labeled title, which is oftentimes not things that we control, nor are things within the bucket of title. And so I think that's part of the dialogue that we've been having with both the FHFA and the GSEs about, let's see the data that you're looking at so that we can best understand and compare it up against the data that the industry has and really do an apples to apples. And I think to date, what's been an unfortunate circumstance is sort of numbers get thrown out, and then, you know, people sort of attach themselves to that, and I think the narrative gets driven in a way that's not sort of fully productive and really educating of you know, of the cost, the true cost. And so I don't know. There's a question. A lot of this is really around premium, but again, I think we've got to have a more robust discussion about all the different factors there, which is what we've been trying to do as an industry. And I know individual companies have been doing that as well.
Definitely. And I think just to your point, you know, without the education to the consumer, the cost that they're paying in that one time is saving them. It's a true insurance. And that's what's scary about this, is how much does the consumer actually know that they're taking on as a risk, you know, with programs that are being introduced like this. So that brings us to our next point is, you know, what can agents and underwriters do to help?
Well, yeah, and this is really important, but let me just say one more thing about the cost equation too, because I think this is also another piece that's really important. So in the education, we've talked about, for instance, in the refi situation, there are discounts that are available for reissue rates and credits associated with lender policies of title, right? And so let's make sure we understand what those look like. That's been part of the conversation before we say we need to reduce costs, because in many instances, those costs are pretty low to begin with. I think the other piece of this is we have to understand all of the dynamics at the state level in terms of how title gets paid, who pays, and those kinds of things. So seller pay states. You know, there are many states where the seller pays the cost of the owner's policy, and the lender policy is a minuscule amount. And so at the end of the day, you know, that consumer is really not paying all that much for the coverage that they're receiving. And there's also simultaneous issue discounts when you get a purchase, a lender and an owner policy that's significantly reduced. And so all of that needs to come into play as we talk about these issues of cost, to make sure that we're not, again, just pulling a number off of a calculator on a website and saying, oh, this is the cost of title, it's too high. When in fact, the real analysis shows it is for the value provided and the protection, it is a significantly underestimated and valuable commodity from the perspective of both lenders and consumers in terms of risk, the risk that it protects. So
definitely.
So on the what we can do to help. So there's a lot. I mean, we have been engaged, obviously, from an advocacy perspective to educate. I mean, that's the role that we play is really to educate policymakers on what is the right approach and the right way to address some of these questions. As I said, I think that has gone a long way to not just us, but others asking questions. We recently had a hearing where the FHFA came before the House Financial Services Committee, and we had, I think, 8 or so members of Congress asking similar questions about both attorney opinion letters and unregulated alternatives, as well as this title waiver pilot, to say, look, before we move down this road, we really need to understand the risk, the cost, and all of those things. And I think that's been helpful. And the reason they've been asking those questions, we had the ALTA Advocacy Summit back in May of this year, which we do every year. I think we had upwards of 200 meetings with members of Congress across the Capitol, on the Senate and the House. We talked about these issues and talked about the value and the expertise that we provide as an industry. And that went a long way to elevating awareness. So the most important thing people can do that are listening is to engage with us in that process. We recently put out an alert to our membership asking them to weigh in with their policymakers on Capitol Hill to express some of the same questions and concerns that we have, both about the AOL and the waiver of title pilot that's been reported. And as a result of that, I think we've got upwards now of 285 members of Congress receiving messages.
Incredible.
We have 2,000 messages from several hundred ALTA members going up there, and again, I think this is all in the effort to address real questions about affordability in the right way, and make sure that we're a partner in the effort as opposed to just having some decisions being made in a vacuum. And that's what we hope to achieve. So I would encourage people to get in touch with us. We could send a link out for them.
Definitely. I just put the link in the chat. It was in our communications coming up to this, and it will be in the follow-up. We will be sending out a recording of this to everybody who attended, and it will include that link as well. But speaking of responsible ways to address housing affordability, why don't you speak a little bit to, because as you've reiterated so many times, ALTA believes in this. This is what you guys are trying to do, but it needs to be done in a responsible manner. So what are some of the programs and initiatives that you're working on right now?
Yeah, well, let me start, Becky, with some policy initiatives, because I think at the end of the day, this all begins and ends with consumer protection. That has been a hallmark of, I think, what the industry has always been about, and what certainly we have pursued over the last several years. From a public policy perspective, one of the big issues that we're seeing and we're facing now, some of you may have heard about the non-title recorded agreements for personal services, these NTRAPs. These are as we see them, predatory real estate fee agreements that in exchange for a small fee, a consumer, in exchange for a payment, a consumer then, is required to list with a certain real estate company for the next 40 years into the future. Liens are placed on their house, and in order to get those off, they have to pay exorbitant amount of dollars to do that. We've created model legislation that's passed now in many states. We're advocating and educating. So that's an example of beneficial policies that affect and protect everyone. Beyond that, from an underserved population perspective, in terms of low and moderate income communities, the other thing that we're looking very closely at is the issue of heirs property. Heirs property challenges certainly create barriers to wealth building and and the ability to tap equity, to refinance, to to really have the home as an asset, to have property rights secured. And so we've been working with a number of experts in our industry to develop a better understanding of the scope of the problem, how prevalent is this, and then what are the things we can do. We've endorsed state legislation, the Uniform Partition of Heirs Property Act, which is now passed, I think, in 23 or 24 states, and we've worked at the federal level with various members of Congress to heighten the awareness and raise those issues, as well. And so we're looking to create new solutions there. And even beyond that, I would say on the policy side, we created, as I think you know well, and have been engaged in, the ALTA Good Deeds Foundation. We've raised over $1 million to provide for grants for nonprofit organizations for affordable housing opportunities in communities across the nation. These are really transformative.
Yeah, it really is incredible what the Good Deeds Foundation has been able to do.
Yeah, smaller scale, but certainly important initiatives. And then finally, I'll just say, many of our members are working directly with state housing finance agencies to tap into down payment assistance programs, to make sure that there are partners in the local community to tap those funds for low and moderate income borrowers, as well as looking at different ways they can package their their fee structures and other things with with appropriate review at the state level from the regulatory agencies. So that's a lot of what we're doing, and we're looking to do more. We are engaged in those conversations with the GSEs and with FHFA, and that will continue because, as you said, we are committed to being a big and important player in this challenge, because it's an important one that we all have a responsibility to solve.
Absolutely. And we appreciate the work the whole team is doing, like I said earlier. And we've got 5 minutes left, and we do have a couple of questions that have already come in. So, and I know you've got a busy week with Congress session. So we did have a comment come through that someone submitted saying that they are actually, through all their title searches for any mortgage, they've actually found, whether it's refi or origination, about 60% need a cure. And I know you were addressing this, but the question is, who is doing this work with the alternative title programs if it's not being done on the onset?
Yeah, I mean, I think particularly in the waiver example, I mean, I think that is a real question, sort of how that is all going to be taken care of in a way that is robust and expert, as it is done on the title side today. So that is, that's an open-ended question at this point. I think there, again, on the AOL side, there's been a lot of claims made about different new providers or products that are out there without a lot of transparency about how that's actually going to be addressed and resolved, in terms of some of that work. So I am hopeful that that transparency will come, particularly given that state regulators are asking for it, and we can have a discussion about how it compares. We've done some analysis of AOLs, in terms of some of the iterations we saw early in this process that really did show significant gaps in coverage. I know there have been some questions as to whether or not some of these products have evolved. Again, maybe, but the reality is nobody has provided the
specifics.
And so that's the other thing, I think, from a listener perspective, Becky, that I would encourage people. If there are things that people pick up in the marketplace or information, I think that's always useful, again, to help us with our own analysis and our ability to collaborate on these issues.
Definitely. ALTA's got so many different forums and committees where they can bring things to your attention, to make sure that you're aware and at least a participant in those conversations, to advocate for the industry overall and the insurance and practices that have been put in place for good reason. So we've got a couple of other questions here. One of them was if there is a geographic limitation to the pilot.
So at this point, it remains unclear sort of where the markets would be in terms of the loans that would be, waived, the title would be waived. That's not something, again, since the proposal has not been sort of sent forward, that we've seen. So more to come on that.
Yes, one of those unknowns. But someone commented saying that if you guys, ALTA, are aware of this, then the insurers or the underwriters must also be aware. And they were just curious, if you know what they're saying about this, or have you participated in any advocacy efforts in conjunction with them?
Yeah, I mean, so I think there have been collaborative conversations with the GSEs and the FHFA in terms of the industry, and there have been individual conversations I know that many companies have had as well. And we've encouraged individual and collective discussions just to better understand goals and objectives, and then try to meet those in a way that, again, is responsible. So that will continue as we move forward.
Right. I think everybody's on the same page in terms of trying to make an effort towards a better future where it's, purchasing a home, which we know is one of the biggest purchases of people's lives, is possible for everyone.
Right.
But the pricings, they certainly haven't come down in this current economic state that we're in. So it makes it even more of a priority for us. And even in the conversations that I've had, whether it's been with an underwriter or a partner or even clients, we've found that everyone seems to be on the same page in terms of wanting to help in whatever way they can. So things are done responsibly with the protection top of mind. Someone's just asking if they properly understood the comment earlier and that the pilot's just limited to refinances. And they said, is it rate and term or also cash out?
Yeah, so refis, as far as sort of we understand, I don't know that we've seen anything sort of deeper than that in terms of the different buckets.
Yeah, and like we said, it's still super important for all of those. The other comment we had was that even in refis, we see 60% of those issues needing to be cured. I cannot thank you enough for participating in this conversation and helping us to be a platform to educate the industry on this issue and continue to help in any way we can. We look forward to hearing even more as this continues to progress.
Yeah, thanks, Becky, and thanks to PropLogix. Appreciate all the work, all your partnership, and hopefully we've educated folks today, and I look forward to continuing to do so.
To learn more and access important links to information on the pilot program and title insurance alternatives, visit our show notes at proplogix.com/resources. PropLogix would like to thank Chris Morton and the rest of the helpful team at the American Land Title Association. Until next time, happy closings.